It's time now for an in-depth look at the global markets today, and for that I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thank you for inviting me today.
So we ended last Friday with Wall Street sharply higher on expectations of an interest rate cut by the Fed. On this Monday, though, Korean stocks not following suit like they might have. What's the story today?
In Wall Street, stocks rose to all-time highs on Friday as investors ended a record-setting week on a high note. The major indexes passed multiple milestones and posted solid gains last week amid testimony from the top Federal Reserve official signaling that a rate cut was coming. Expectations for lower rates persisted this week despite the release of some stronger than expected inflation data. The producer and consumer price indexes rose more than expected last month. However, market expectations for lower rates currently sit at 100%. Traders are also pricing in a 20% chance of the Fed cutting by 50 basis points. Asian stocks began the week with a cautious tone as investors turned their attention to upcoming data on Chinese economic growth amid expectations for further policy support. South Korea's main equity index edged down by 0.2%, and Japanese market was closed for our holiday.
Now, with the trade tensions that we've been talking about so much, it seems Japanese companies have seen a worse impact on their share prices than Korean companies. Why is that, and where do you see these two markets going forward?
The Japanese government's export restriction on South Korea have led to a larger decline in the share prices of Japanese companies than in South Korean companies. According to the Tokyo Stock Exchange, after the Japanese government tightened regulations on the export of three items needed for the semiconductor and display panel production, the share prices of Japanese manufacturers have been struggling in general. Share price of Stella Chemical, an etching gas producer, fell 4.6% in this month. The share price of JSR, a photoresist producer, also fell 3.4% in the same period, and Shinsei Chemical's share price also fell 2.9%. In addition, the share price of Sumitomo Chemical, which produces fluorine, polyimide, and hydrogen fluoride, also fell 1.4% in the same period. This was because the largest customers, such as Samsung Electronics and SK Hynix, are looking for alternative suppliers or localization of production materials, which may have a negative impact on Japanese suppliers.
Now, looking ahead this week, the Bank of Korea will be meeting to set interest rates, and it'll release a revised forecast for the economy in the second half of the year. And the National Assembly still hasn't passed the extra budget for this year. What are you watching this week?
The Bank of Korea will hold a monetary policy meeting on this coming Thursday. The BOK is expected to keep its policy rate intact this month, though a rate cut may be inevitable down the road to help boost economic growth. The extraordinary session of the National Assembly ends on this coming Friday. In April, the Moon government and the ruling party proposed a 6.7 trillion won extra budget to cope with an economic slowdown and fight industrial pollution. The extra budget bill is still pending in the National Assembly amid a call by the main opposition, Liberty Korea Party, to slash much of the proposed spending. This week would be an IPO super week of the third quarter in year 2019. Quite a good number of IPO activities will take place in this week and the following week. This week, 6 pre-IPO companies begin book building for institutional investors, and another 2 companies will begin book building in the next week.
All right, Dr. Hwang, that's where we'll have to leave it today. Thanks so much for sharing your insights, as always.
Thank you for having me today.